Hey, good morning. Let's go over today's trade plan. So, over the last couple of weeks, we've seen that the market has been stuck in a fairly defined range here, with the bottom of the range being at the 51 quarter to 53.75 support, and the upper edge of the range being at 68 half to 71. And so far, the market has just been balancing within this range. Now, we know that eventually the market is going to break one way or the other. But until that happens, this is a very balanced and range-bound market. So in the overnight session, we saw sell side active in the upper part of the range, and we got to move down into 56 half. So overnight, sellers have been more dominant, but short term, our bias continues to be neutral because the market is still stuck in a balance and stuck in a range. And within that range, we have the high volume node at 2160 to 6075. So that's an area where we've seen a lot of volume take place over the last 2 weeks. Above that, we have pre-market resistance at 62 quarter to 64 quarter. If we can take that out to the upside, then that would be a short-term signal of buyers being aggressive and active in the market. And then beyond that, we have the upper edge of the balance at 68 half to 71, and that's really the primary resistance on the day. And that's the area that would have to be taken out in order for the buyers to really gain control and put in a balanced breakout. Now, in order for that balanced breakout to take place, we do need to see broad market strength. We need to see a lot of upside momentum and the other markets also participating in the move. Now, given that the other markets are at larger time frame resistance, and we've seen sellers active in those markets in Nasdaq and the Russell here in the overnight session, as we head back up into initial resistance in the S&P and their own respective resistance zones in NQ and TF, sellers can still be active. So just keep in mind that all markets are going to be hitting their respective resistance areas in the upper edge of the S&P balance, and we need to see a breakout across the board in order to really get any sustained movement to the upside. On the downside, we have pre-market support 55 half, 56 half with the overnight low, and then the bottom of the balance at 51 quarter to 53.75. And if we take out 51 quarter to 53.75, then we would be breaking below balance. And in order to get a sustained move on the downside, we would have to see broad market weakness. We'd have to see a lot of weakness on the advanced decline line. The NYC tick would have to be showing a lot of sustained downside momentum, and then there would be the possibility of getting a sustained move below 51 quarter. So until we get a high momentum break either above 68 half to 71 or below 51 quarter to 53.75, this is going to be a range bound and balanced market, and that means that we can continue to balance within this range until there is either a catalyst or just a high momentum break either to the upside or to the downside. The larger time frame bias continues to be bullish, but short term the bias is going to be neutral, and then if we get a break to the downside, that short-term bias would switch and become bearish, and if we get a break to the upside, that short-term bias would become bullish. And until we get that break, we're simply going to treat this as a very balanced range-bound market, which means there can be edge on both sides, long and short. As long as you are getting good trade location on your entries, at least you'll have the ability to manage that trade correctly. So at the bottom of the balance, if you're getting involved on the long side and we're not seeing any excess weakness, there can be edge over there. At the top of the balance, as long as we're not seeing any excess strength, there can be edge on the short side. And in between, we can get just continued range-bound activity. So, the middle of the balance is going to be a riskier area to initiate a trade. And it would really only make sense to initiate a trade in the middle of balance if we are seeing some pretty decent momentum to go along with the trade. So for example, if we have upside momentum, then it doesn't matter what the entry price is. As long as it's still timed well, it can work out. But if there's really no momentum one way or the other, then the middle of the balance is a riskier area to initiate a new trade. So off the open, keep an eye on 60 to 60.75, the high volume node, see whether we're trading above it, below it. Keep an eye on 62 quarters, 64 quarters, short term. That's going to be the resistance that needs to be taken out in order for the buyers to regain control on the smaller time frames. And if we continue to fail at 62 quarter, 64 quarter, then we could be heading down for a test of 51 quarter 53.75 again, and then that's really going to be the important inflection point on the downside. So those are the main ideas heading into the open. And on the econ calendar, we don't really have a lot going on today, but we do have Amazon and Google reporting earnings after the close. So aside from that, there's really no major catalyst or economic report that we need to be concerned about. But that's really how the market is set up at this point in time. That's the market context for today. Let's see if either side takes control. If not, then we might just continue balancing. We've been doing so for about 2 weeks now. So those are the main thoughts. Let's see if one side does take over, and we'll take it from there.